What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Hope you guys are all doing well out there. Today is Wednesday, and it's a crazy, crazy day in Bitcoin. So we're going to go over some of the top news out there. The SBF trial is underway, and there's some really huge kind of conspiracy confirmed sort of quotes coming out of that trial. So we're going to take a look at that. Really, I wanted the major kind of emphasis of this episode. I wanted to discuss the Bitcoin dip and why it is mismatching with all of the other stuff that we see in macro. I've been talking about this for a couple weeks. So what I did was I went ahead and made one of my premium posts on my website public, and we're going to go through that. So I've been talking about this for a couple weeks, talking about this turn into recession, a blow off top in a lot of these markets, which has all started coming true. But Bitcoin is the one that is not matching with everything else. So I went back and forth a lot today, personally, trying to figure out why Bitcoin is dipping right now. There could be a lot of reasons, and it's not a big dip or anything like that. We're down to 26,500, but you know, when everything else in the theory is going correctly, you need to examine why Bitcoin is not following. So anyway, let me share my screen. And for those of you that are familiar with my content, I finally got a new computer. So I took the money away from stacking sats for a little while to get a new computer. I haven't set that up yet, but that is in the process of happening, and hopefully I will solve all of any sort of freezing problems or anything that I have in the future. But okay, what you're looking at right here is bitcoinandmarkets.com. All my content comes out here, and scrolling down here, we're going to take a look at this. Climax in markets leads to bullish period ahead. So I wrote this back on September 28th, and we're going to read through that. Before I get to that, though, I want to share this screen. And this is Bitcoin Magazine Pro. Just came out with a new post here. Top recession trades. Will Bitcoin break out soon? That came out just this morning. It is for paid members over there on their newsletter, but check it out and try it out if you like it. You know, I think it's worth the money. If you don't, you can always cancel your subscription, but check out bmpro.substack.com. And more than just me write for it. So you can see this Landon Manning has a bunch of posts in here. So we're trying to get multiple people writing on this. So I think it's a good value. Okay. And then before that, let's take a look at price. And you can see the dip here on the Bitcoin chart is not crazy. It's right down to the 50-day moving average, which is sitting at 26,600. Price right now is 26,666. So we'll see if we get a bounce on that. There was a lot of long liquidations today, and we will see if that is what the market was hunting for, and perhaps we bounce from there. I thought 27,000 was going to hold, but it did not. Okay, let's get back into this Climax post, because I think this is important to kind of describe how I'm thinking of this market right now. All right, so on these protons, I try to do them relatively short. Nowadays, they were getting very long, but this is a relatively short one. So where is the recession? Coming into this year, it felt as if most macro analysts agreed a recession was going to happen this year, and that's 2023. In 2022, the first half was negative GDP growth, but they didn't label it a recession. Even laymen started talking about recession, stagflation, etc. I stuck my neck out with specific odds on a recession, always eyeing end of Q3 as a pivotal time. Those odds were 25% hard landing, 50% soft landing, 25% no landing. So 75% chance of a mild or better recession. And if you guys go back in time, there was this Jamie Dimon came out and he was given odds as well. And some of his odds were like 30% disaster, like utter disaster, the economic hurricane, he called it. 30% that there was going to be economic disaster, which is crazy. But these were my odds pretty much for all of 2023 so far for this year. Now, I have updated my odds for next year recession, but that's a little bit beyond this post. Okay, well, Q3 is here, or end of Q3 is here, and we have no recession. In fact, markets are telling us we are very far from recession, and several charts are climaxing as we speak. The dollar has put in a green candle 11 straight weeks, raging all the way up to the 50% fib retracement. Okay, and then this is the one that I put. This is the chart that I have in this post, but remember, this is from 28 September, and we were raging right up into that 50% retracement fib. And let's go back and check what it is right now. So we'll look at the dollar, and I could put that retracement. Let me put the week, put it on weekly, and put a fib on here. I did it close, top and bottom. And shit. Let me put the 50% in there. Okay. So you can see right on that 50% fib, that's pretty much right exactly where it stopped and turned around. And I'm making this call at the time back on the 28th of September. Okay. So the US 10-year yield is going parabolic. And it definitely looked parabolic here. It looked like it was going towards a blow off top. At the time, it was 464. Let's take a look at where it is today. Okay. And right now we're sitting at 459. And last week, it did go a little bit higher last week, but it hit fib extension and turned back around. So that is also a blow off top. At least it's forming up to be that way right now. And oil looks very similar to the dollar, hitting a 50% fib retracement as well. So let me look at this. You can see going up into this resistance, the 50% fib retracement, just like the dollar. Very, very similar at least. And let's check out where it is today. I don't have the 50% fib retracement on there, but let me get rid of some of these things. This 50% fib retracement, well, let me see if I can pull it up. All right, there it is. And yeah, it hit right in that resistance zone, and it turned around very hard as well. But I'm writing about all this back on September 28th. So I say this is not the start of what a start of a recession looks like. In fact, it's exactly the opposite. If not now, when? As it stands now, markets are not signaling a recession anytime soon. Okay, I talk about updating my recession odds here. Historically, rates top a year or so before a recession and are well on their way down by the time an official recession starts, as collateral rehypothecation slows and banks become defensive. With rates screaming higher, a recession could be far away. Just look at this chart here. And guys, on Telegram, I'm not sharing these charts, but you can go to the website and find Proton number 4. It's the climax headline, and you can follow along. So, okay, this is, you can see, if rates are going up in the modern era, we're not near a recession. So back in 87, they screamed higher, they rolled over. It took another 2 years to go into recession. Same happened in 99. Rates were going up, and as rates were going up, we weren't near a recession. They turned over and started coming back down only going into recession in 2001. Same as the great financial crisis. You can see as rates were rising in 2006, 2007, then they turned over. Then we were going towards a recession. Same in 2018, 2019, rising and didn't get close to recession until they started falling. So now we're in the exact same boat right now. Rates are rising. So we're not even approaching a recession until rates stop rising and turn over. Maybe we just saw that. Maybe we just saw the climax to the rates, and we are headed towards recession. That's actually what I'm calling here. So, all right. Also, stocks tend to perform very well in the year prior to recessions. I pointed this out on one of the BM Pro issues as well, and heard it from Darius Dale of 42 Macro with actual numbers. I used a chart and I didn't crunch the numbers originally. He said, Darius Dale, said the 12 months leading up to recession average a 16% return on stocks. The 12 months leading up to recession average 16% return. The last 3 months before a recession, 9%. So over half of the total year's gains prior to recession come 3 months before recession. Of course, it doesn't have to be exact every time, but this time is not different, most likely. I mean, if you're putting a bet on the table, you shouldn't bet against something that happens over and over and over again. Okay, this is huge, considering yearly returns only average roughly 7% over the long term. That means years leading up to recession see over 2x normal returns. We haven't seen this yet either. So recession still has to be somewhat far away. Only the dot-com recession showed any significant downward price action in stocks prior to recession, but it was uniquely a stock-driven phenomenon, right? The dot-com bust. Never has the stock market been as long removed from the high and then went into recession. So let me bring up this. So you can see the high was all the way back at the beginning of 2022. We've never been that far removed from the high and then went into recession. It's always been, we've already been past the recession at this point. So if we're going into recession, we still have a long way to go. We're going to make new all-time highs in the stock market before we go back into recession, almost guaranteed. And you can see the only going back all the way to 1980, every time stocks go up prior to recession, except for dot-com. They did go up. Obviously, it was a huge bubble for dot-coms, but it started going down a little bit earlier prior to recession. But okay, so that was that one. Let's keep going. Therefore, I am expecting a very good Q4 for stocks, bonds, and Bitcoin. These good times should continue with the official recession coming either in the second half of 2024 or in 2025. Seasonality. Okay, so this was interesting, and I'll just read this out because I thought this was valuable. All of these moves in major markets are corresponding with the end of Q3. This seasonality is very important because most major market crises happen around the end of Q3, with the end of Q1 coming in second most important seasonally. I think if we stripped out all the seasonal adjustments in almost every metric, we'd get a better idea of what the real seasonality looks like. It is very powerful. So, everything is seasonally adjusted CPI, seasonally adjusted employment, seasonally adjusted this and that. If you strip out all the seasonal adjustments, you would get, it would be wild how impactful seasonality really is on the economy. I think all the seasonal adjustments kind of blind us to this fact. And if we didn't have all the seasonally adjusted data, it would be much easier to see why end of Q3 is so important for markets. Okay, in banking, there is a well-known seasonality to interest rates and loans. December through February, activity is typically at its lowest for loan origination. It ramps up through the spring and summer and tends to climax each year in August or September. So loan origination climaxes each year around August or September. And what is the next quarterly report? End of Q3. I think it's all this is hidden. This is hidden by the seasonal adjustments. That being the case, quarterly reports due by banks to the SEC or other agencies would also culminate around the end of Q3. The effect of the government fiscal year is also huge. It runs from 1 October to 30 September. So their fiscal year doesn't end December 31st, it ends September 30th. And I remember my time in the military, we would submit all of our dream spending items in September because we would be trying to use our money until, before the end of the fiscal year. Government spending is a significant portion of the economy and getting bigger all the time. Government contractors would orient their fiscal year around the government's probably. So if you're a big government contractor, you have the ability to change when your fiscal reporting happens. Your fiscal year happens for your private business. But if you're a government contractor, you're probably going to orient that around the government's fiscal year as well. So that's why Q3 has a growing importance, not just in the banking sector with the seasonal loan origination numbers, but also with the government spending, government fiscal year. So anyway, I thought that was interesting, and I hope you guys. One more paragraph. Lastly, the good old agriculture cycle. Obviously, the agricultural sector is going to be oriented around a fiscal year of seasonal harvests. Those come at the end of summer or end of Q3. Trading in futures and options would therefore target those dates for delivery. So lots of things adding up to why Q3 is so important, why seasonality is so important. And sometimes those seasonal adjustments, even though they smooth it out and they are meant to kind of see abnormal trends, abnormal things, I think it would help a lot to see unseasonally adjusted data. Okay, so that is that one. Hope you guys found that interesting. So anyway, I think that, like I say up here, stocks, bonds, and Bitcoin should be going up. And also I'm big on the peak oil demand. So oil price should be going down. And that's actually what we're seeing out there. So we see oil going down. We see bonds turning over. We see the dollar turning over. We see gold going up. Pretty much everything that I have been predicting for the last couple months is starting to happen, except for Bitcoin. So why could that be? Lots and lots of ideas out there right now, but we will talk about price more on another episode. Let's get into this SBF controversy. So there he's on, his trial is going, and his girlfriend here, Carolyn Ellison, she was testifying today, and a bunch of hot takes came out of her testimony. She said that when I read the direct quote, it didn't come across to me like they were trying to hold the price down, but SBF had told her when Bitcoin went over 20,000 to sell Bitcoin. But it might be just because they didn't want to crash the market. They were trying to wait until 20,000, but whatever. They were definitely selling their customers Bitcoin, trying to control the price of Bitcoin. That was very interesting. Here is another one, and this is relayed by Joe Burnett. Alameda was insolvent even during the bull market. Very, very interesting. It appears they used or borrowed, quote unquote, borrowed FTX customer Bitcoin and other customer assets to buy Samcoin. So this would put sell pressure on Bitcoin, like, I wouldn't call it fake, but I would call it artificial sell pressure on Bitcoin, or illegal sell pressure, maybe is a better way to put it, because it's not fake. It actually was sell pressure, but it was illegal. And then maybe Bitcoin would have hit 100K in that cycle. And I think that's very possible. And what happens if it does? Okay, let's say the cycle did go to 100,000. Would plan B have been thrown out of Bitcoiner circles so much if his stock to flow actually came true? And since then, selling Bitcoin, trying to push Bitcoin below 20,000, this illegal market, maybe stock to flow would have been much more closely connected to where price is. And maybe the whole stock to flow thing would still be alive and well. I mean, I think it is, but, he's been kind of thrown out. So that was interesting. And then we have this one here from Watcher Guru. Prosecutors reveal that Carolyn Ellison's to-do list included getting regulators to crack down on Binance. Now, why I thought this was interesting is because this shows collusion breaks down. This shows that there's whale wars going on, in the shadows, under the surface. I think similar things were targeted at Tether. I hope that comes out too. I don't know if that would come out in this. FTT, was that a stable coin? I'm not sure. I think it was just a token for them. But there could be something in all this discovery and this trial that comes out showing that there was the same sort of stuff going on against Tether. So FUD Tether, FUD Binance. Anyway, steal from your customers, all of that. Okay, so that's the update on the SBF stuff. Let's take a look at Jim Cramer. And he is very famous for being a contrary indicator. And he says in this little clip, which I'm not going to play because of the audio settings, he said that Bitcoin is about to go down big. Bitcoin is about to go down big. Now, who knows when these people say these type of things, if they are talking about Bitcoin or are they talking about the scam coins? He didn't say crypto, but see, when he says crypto, he would mean Bitcoin at all. But when he says Bitcoin, we don't really know if he's meaning Bitcoin or if he's meaning the scam coins. So I don't know. Usually I'm happy when people use Bitcoin, but in this case, he might be confusing the terms here. But also, as a contraindicator, this could be a bottom for Bitcoin. So we will see that if Bitcoin turns around, the price turns around, then all of the Lego pieces that I have been talking about for the last month or so will come into alignment and everything will be trekking along as it should. Okay, last story up here for the day is going to be this one, and it is Country Garden caves to debts as China's real estate crisis worsens. So, Country Garden is the largest real estate developer in China. Evergrande was the second largest, and they have been missing payments and everything. They're going through bankruptcy. This is a big deal, and I'll reiterate why this is a big deal, because the real estate market over there it's like 30% of their GDP. Think about all the people, the people that make the rebar, the people that make the fixtures for the inside of all of these ghost towns, the cement, the workers, sourcing, the tile or whatever, wood for the cupboards or whatever you have. It's a huge, huge, huge industry. The metal for the plumbing under the ground, the streets around these big things. These are big complexes. These aren't just, one-off apartment buildings. These are like 50 of these things, plus probably an amenity center, restaurants and everything for these big, gigantic real estate developments. 30% of the GDP, probably more if you connected all the dots to where this is going, is this real estate market. Evergrande, the second largest, is gone. Now, Country Garden is about to be gone as well. On top of that, 70% of their household wealth is in real estate, 70%. And they're trying to get out of this middle income trap, which is really a low income trap for China. They're still a low income country. on average. But they're trying to get out of this and become a consumer-led economy. Well, how well is that going to work when 70% of your household wealth is about to be lit on fire, is being lit on fire right now? You can do a controlled demolition. That's what they're trying to do. Slowly but surely, let things fail, let things get worked out. But that's not a way, going command and control on this stuff is also not a way to get a thriving consumer-led economy. They're damned if they do and damned if they don't. The only solution is deterioration of their economy. And that's what we're going to see. But okay, Country Garden Caves. The property giant is effectively declaring that it has defaulted on its debt, becoming one of the biggest casualties of China's deepening property crisis. It would be the biggest, not one of the biggest. It is the largest developer in China. The embattled property developer Country Garden said it was unable to repay a loan and that it expects to miss upcoming overseas debt payments as a result of plunging sales of China's spiraling property crisis. So overseas debt payments, that's important because a lot of these are foreign investors. They borrowed money from foreign investors, and now those are the first ones that they're going to default on. A lot of them are also dollar denominated. So this can go into this whole larger macro, what word am I looking for? Shift that we're seeing. So, you have a demand for dollars to repay this debt. So you can't find dollars, so you start selling your treasuries. The banks might start selling the treasuries because banks and these real estate developers are very symbiotic. And so they're going to start selling the bank's assets. They're going to start selling those to try to buoy the whole bubble, the whole property bubble over there. So you're going to have pressure on rates to go higher, pressure on the dollar to go higher, which is exactly what we saw. Then there was rumors that I reported on about them turning to gold. So the banks started selling gold to get access to some of these dollars. So then we started seeing the price of gold decouple from Bitcoin and start going down about 2 or 3 weeks ago. Now we're culminating here in a bunch of missed payments and perhaps just straight up defaults where they're going to write down some of this. Investors are going to get 50, even maybe 10 cents on the dollar. And that is going to stop this acute financial pressure. So a lot of people don't understand how you can shift, right? You can shift from a blow off top in yields, why yields won't keep going higher or whatever. That's because you have default, which can put a stop to it. You're going to start seeing strengthening CNY, the Chinese yuan, slightly weakening dollar, and falling rates. Most likely, this is a sign that we are at that stage as well. Not just looking at the charts and doing technical analysis, which was quite accurate, but this too, showing that they're starting to go through this default, means the acute phase is over. They have given up. All right. So that is all I have for today, guys. Thank you for joining me. My name is Ansel Lindner. Check out bitcoinandmarkets.com. Let me go and share that. bitcoinandmarkets.com, where I put out all my content. You can support my content over there by becoming a paid member. You get access to those protons. So that was a premium content that I made public just for this episode. But I also do a free weekly newsletter, so you can become a free supporter over there. Check out bmpro.substack.com. That is Bitcoin Magazine's premium newsletter for things like this, like price commentary and macro commentary. And what else? That's it, guys. Thanks for hanging out. I'll see you on the next one. Bye.